All this talk about Trump and tariffs and trade wars has got me so riled up, you guys. So we're going to do your normal market update for this month, but it's going to look completely different. Instead of just giving you the normal stats, this month I'm going to give you a breakdown of a news article that I saw recently, which has been driving me bonkers. And the headline is, the housing market shifts to favor buyers, but they're not buying. So naturally you would say, okay, great. That means we're in a buyer's market. It's good for buyers, right? The reality is that's not the case at all. And one thing that I did want to point out before we even get into this is something to be aware of with news articles like this. You've really got to figure out exactly what the source is and where the data is coming from, because is it a national number or is it a local number, which can be completely different. And then I did see this is from the National Observer section, apparently, of this news article. So even though it's a Minneapolis St Paul article, it's a national numbers that they're showing you here. So that's the first thing to keep in mind. So the big question really is, are we in a buyer's market or are we in a seller's market? And just like I normally do, I'm still going to show you my graphs, but I also want to dive through kind of line by line of this news article so that it'll help you as you're reading similar articles, which you will start to see over the next months and months and months. Then you can know which ones are actually real, which ones not, and you can figure out how to decide if it's meaningful for you or not. So let's get into the article and some things that I felt were meaningful for you guys. Like much of the economy, tariffs and border uncertainty are weighing on home industries in a crucial spring season. So more than 375,000 homes were listed on the market, which is a nearly 9% increase compared to this time last year. So first of all, there's more homes on the market. That's what inventory is going to be referring to. So let's look at our numbers locally and see exactly what that looks like. So here, if I switch you into, this is our local MLS system called InfoSparks. This is the exact number of homes for sale. And they are just talking since this time last year. So 9% more homes are on the market from last year. So as you can see, there are definitely more homes on the market. Now, let me put my little calculator here and hopefully it'll show up on my screen. Yep, here we go. So if I'm looking at last year, there was, let's go from 8,963 homes this year divided by 7,710. So it looks like we're currently up about 16% from last year. So overall, that can seem kind of shocking. What do you as the average home buyer make of a number like that? 16% more. So compared to this national number, we do have 16% instead of 9. However, I want to take this and I'm going to zoom this out for you. Let's just say 10 years here. Okay. As you can see right here, in the last 10 years, we're still extremely low. So the actual number of homes for buyers to pick from is low. That's what a low inventory would mean. So while here we're seeing it's an increase of 9%, you should be reading that as a home buyer. And as a realtor, I'm reading this and going, that's fantastic. I'm cheering it on. Not only is the national average up 9%, but locally we're up 16%, which is a really, really encouraging number. So what does that mean for you practically? It means if you're buying a home right now, you're going to have more options to pick from out in the market. But that is only one side of the market, because obviously you've got supply of homes and then you've got demand from buyers. So if there's more homes to choose from, but there's also a lot more buyers to compete with, then it's sort of a wash, right? So it's a relative kind of thing. As I'm going to show you here in just a second, the number of homes available is up and the number of buyers is down, which makes it actually the inverse. And that is definitely a little bit more favorable for buyers. To that point, they do point out in this article that the new pending sales were flat compared to last year, which again means the number of people that are actually putting a home under contract to those buyers is sitting flat. And that's a really good thing. You shouldn't read that as a negative or something to be concerned about. That's fantastic. That means the same number of people are buying homes right now as were previously, but those buyers just have more homes to pick from. So we really, really like that. And then they talk about having a lower average mortgage rate this year from a year ago. So let's dive straight into interest rates. And to find interest rates, I really like Mortgage News Daily. Now their app is terrible. Don't download the app. But I'll show you how to find current mortgage rates. So when you go to the website, you can click on this banner up top, 30-year fixed rate. That'll pull up here, which has all the different loan types. So if you're a VA, you can click on that, for example. Most people, you can just click on this 30-year fixed option right here. So we'll flip to the 1-year graph. Oh, this already is. Is this a 1 year? Yeah, this is a 1-year graph. So, and I'm going to just turn off the MBA and Freddie Mac numbers. Let's just look at Mortgage News Daily, just so it's not so confusing and chaotic. So this is from 1 year ago today. Okay, so in this article, they're claiming that there's a lower average monthly mortgage rate than a year ago. So if you look at this right here, that is true. So about a year ago, we were at this peak, 7.52. Okay, what did we start at? 7.39 is where we started at 1 year ago from the time I'm recording this video. And then we're currently at 6.94. So roughly almost 0.5% lower, 0.4, 0.5% lower rate currently. So that is really good news. However, let's also factor in the fact that that was kind of a spike that leveled off pretty quick. And then you also had this huge belly of really low rates. So we got down to, looks like 6.11 is their lowest number. And then we spiked back up. This would be right towards the beginning of the year. We're at 7.25, and now we're back to just under 7, basically. So, what you should make of this, rates really haven't changed much, not in any meaningful kind of way. Yes, we are technically down from this big spike there. However, if I zoom this out, let's pull it to the 5-year graph here. It paints a little bit bigger of a picture. So if I pull this out here, you can see we really haven't seen any significant changes for about 2 years. But what we have seen is lots of volatility, just meaning that's going up and down. That brings a little bit of uncertainty. 1 week a buyer is approved and the payment they're comfortable with gets them $400,000. The next week it's $425,000, and that's great. And then the next week it's, $380,000 or something. So it's just the amount you can qualify for the payment you're comfortable with has changed a lot. But the rate itself hasn't really changed too much for almost like 2 years, a year and a half, maybe 18 months. So then if you're looking at this, you're thinking, well, good Lord, I don't want to buy a house if I'm at the top of this graph, right? I want to buy a home when things are at the bottom. Perfectly makes sense. Like, yes, everybody would like to do that. However, you've also got to gain a little perspective. So I'm going to zoom this all the way out to the max. Now, before you start roasting me in the comments or something, I get lots of trolls these days. There's lots of nasty people on there. Not you, I'm sure, other people. But anyways, if I zoom this out all the way, you can see there's kind of the inverse. That's the opposite extreme. So back in the 80s, we were at like 18% interest rate, which is crazy high. Okay, that's another extreme. That's not really normal. Okay, so I'll zoom this into, what should we do, like the 90s? Okay, so let's say since the 90s, you can see where interest rates have been. Now, if you remember on that graph I just showed you a second ago, super low rates, super high rates, right? Well, in reality, those super low rates were these over here that were not just a super low for the last couple of years, but in decades, that was the lowest we'd ever seen. So that was also an extreme. And we kind of have to factor that out of the realm of what's actually normal in mortgage rates. Okay. First-time home buyers, you're just looking at this going, well, all I hear is interest rates are super high. They are relative to the last few years, but they're not relative to historic averages. Okay. So even if we pull this out, if you're looking at, 6%, 7% interest rates, that's actually sort of normal. It's not what we want. Like I'm hoping and praying that things come down. But just to give you some broader context, it's not as extreme as a lot of news might make it seem from what you're hearing. And then back into our article, another thing that they're talking about is price cuts are hitting their highest point in the last 7 years. So let's see if this one's true or it's not. Well, in reality, I can tell you that it is actually pretty true for our Twin Cities. There was another graph I was going to pull up for you. I didn't. It's by a realtor locally that puts out, he tracks things to like the nth degree. It's also super hard to read and chaotic even for me, so I didn't try and bring that up for you for today. But yes, price reductions are up for sure. So is that a good thing or is that a bad thing? Well, first of all, why don't we just look at the actual prices of homes, and so then you can see what that's doing. Okay, so if I come back into InfoSparks, let's look at our sales prices, and this is for the last 10 years, okay? And this is the median. Here's the average if you care to know the difference. I don't really know if there's a meaningful difference of which one to look at, but median is the most common one we look at. So for the last 10 years, here's what sales prices have done. They've gone up consistently every single year, essentially, okay? Now, full transparency, let's pull this out to the max here, which takes us back to 2005, so about a 20-year graph. What you're looking at with this little knob here on the far left side, that's the Great Recession. So that's when everything swole well above where it should have been. And then the market popped right there. Everything dropped. This bottom down here, that really is the Great Recession that you heard about. And then ever since we've recovered from there, things basically haven't stopped going up locally in the Twin Cities. So, back to here, what about price cuts? What does that have to do anything? Honestly, not really much, actually. It does if you're let me zoom this back in. It does a little bit if you are a home seller, right? But this is more to the mindset of sellers. They were shooting for a price way up here and then didn't happen. So then they had to lower their price in order to get their home to sell. So it's not really so much for buyers, but it is for sellers just to be aware of. You can't swing for the fences on those prices. If you do, you're going to sit on the market and you're going to get talked down on your price. So that is supporting the title of this article, suggesting that it is more buyer favored. They're saying it's a buyer's market. It's not. But just so you know, price cuts do happen, but they're less relevant for buyers, and it's mostly a seller's thing. Okay. It does also mean that I'm able to negotiate usually a better deal for my buyers, and we can talk the sellers down and kind of beat them up on that price if they are over. Okay. This was interesting too. Okay, so inventory rose by 1.515 million homes in March, which was an increase from 19% from last year. Now, again, inventory, when you hear the word inventory rose, that just means the quantity of homes that are available for sale right now. Okay, that's what inventory is, the supply of homes the market's offering you. So 19% they're saying from year over year from March. Okay, so let's start with that one. I'll switch here to the number of homes for sale, and I'm just going to zoom in for us to March. Okay, so where's my calculator? Let's get that back over here. So if we go back to, they're saying March to March. Okay, so I better pull up here too. So we are ending 8963 divided by 7918. Is this one, did I already calculate this for you? I don't know. I've been running so many numbers. So anyways, our inventory locally is up 13.2% in the metro. Okay, so what did they say? 19. So there nationally, I guess we're up 19%. Locally, we're up 13%. I'm gonna come back to this again in a minute, or I'm gonna do something else. Or I'm gonna explain what that means for you guys. But inventory is now about 20. This was kind of a funny one. Okay, inventory is now about 24% below 2018 and 2019 averages for spring housing market. So kind of a weird one. Let's zoom this one out to, come back here. Let's go to our 10 years, I guess. Okay, 2018, 2019 averages, we were doing March, wasn't it? Okay, so 11,206 with 11,195. Okay, so the average then was 11,100. Can you guys see this? Yep. And then divided that by our 8963 is what we're at currently. So yes, 24.4% lower inventory than our 2018 and 2019 averages. Now, I'm not entirely sure how or why they pulled up those 2 years specifically, and why we're picking 2 years and why we're averaging those two as opposed to 1 year or averaging 5 years. I don't know. But anyways, I thought it'd be relevant to do this. So if I zoom back to, we're talking inventory, we're talking quantity of homes for sale. They picked these two numbers right here. So this would be 2018, where we're at March 2018, and then 2019 March right here. Okay, so basically in this little valley right there. I don't know why that's particularly relevant again. However, if you look at sort of the long-term historic average, again, this huge peak here is an extreme. That's after the market collapsed. Everybody was trying to sell their house. Everybody was upside down. They were desperate to sell their homes. So a ton of homes were for sale on the market. Huge increase in inventory, right? Then we popped and dropped, and we kept getting lower. And if I switch you back to those interest rates, if you can see right here, what are we doing around 2018, 19, 20? You can see interest rates just went down, 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 down. Okay, let me pull out that max again. Oops, let's do this. So let's pull out that max. Okay, so look at historically, we had never seen interest rates that low ever that we were seeing in 2018, 19, and 20. Okay, so as we're pulling down to these numbers, these are more and more and more homes that are selling off than we should have in theory, right? Because interest rates were so low, more and more and more people kept buying, and they were buying sooner than kind of the normal cyclical average. I think it's 7 to 8 years on average. People will sell their home, buy something new, every 7 to 10 years. But then all of a sudden interest rates are super good. They're like, man, I don't really like this house anymore. We've outgrown it. We got more kids. We've got less kids. Something's shifted. And so they want to get to a different home. So then they're selling in a shorter cycle time than they had been previously because interest rates were so low. Heck, why not, right? And then all of a sudden we saw COVID happen. And so then that's right in here, 2020 kind of time frame. And you can see we went from already super low to extremely low on our amount of inventory that's in the market, right? The number of homes for sale. So exactly what should we see for an average? Honestly, I don't know. I'm not sure if there is an exact metric that says like this is the exact right, perfect number of homes to have on the market. It's all very relative to the number of buyers that are buying. But okay, let's just assume it's somewhere like this middle line here, which is 20,000, right? That's sort of the average between the extremes. Okay, let's say there should be 20,000 homes on the market. Well, what this thing is saying is that we're currently 24% below. That would be a huge negative, okay? And that would suggest that we're still in a very seller-favored market because inventory is so low. Seller-favored because there's very few homes to pick from on the market that buyers can choose from. Therefore, if buyers don't have a lot of options, you can charge a premium for yours when you go to sell your house because buyers don't have any other options. So that would make it very seller favored. And then on the flip side, that's down, but this one's up. And so what they're saying is we're still down compared to what we were here, which feels like they're painting it like a negative. But then they're also saying that we're going up, which is a bad thing, which they're also painting as a negative. In reality, here's what's going on with inventory. We were extremely low before in 2018-19. Then we went even lower with COVID, and we're seeing things come back up. So let's look at what that number did the last year. So we're currently at 8963, and there was 7918 homes. So we're currently up. Oh, I just did that number. This is that 13% more that we've spiked up in inventory. That's a really, really good thing. So if you see inventory is going up, cheer that number. That's a really good thing. We don't want to have low inventory because it's kind of an extreme. This paragraph kind of drove me nuts. So they said in this 4-week period of time that ended in April 13th, the median sale price went down from the same time a year ago in 10 of the 50 most populous U.S. metro areas. So from first glance, you're like, oh my gosh, prices are dropping. That's terrible. The market's horrible. I shouldn't buy now because I'm going to be upside down. Okay, first of all, it's only in 10 of the 50 most populous areas. So 80% of those markets actually stayed the same or they went up in value. And frankly, home prices are always going up and down, so there's never going to be 100%, I wouldn't think, that go up in value in an average period of time, right? So first of all, while they're painting it like this is almost a bad thing that home prices are dropping, it's only in 20% of the metros across the U.S. So that's the first thing that I thought was kind of misleading. Ours did go up. There was another graph I should have brought for you guys today, but they had spread out basically like all 50 or something of the major metros. They were all cities. Minneapolis there was like the median number for the U.S. average, and ours was like the first or the second one over from the average. So we were just slightly higher sale price increases than the U.S. average. So locally, this is kind of a non-issue for us. I'll still show you what sale prices are doing, but it's just such scandalous sounding headlines, right? So back into sale prices, this is what we're doing. This is the really wide macro lens of what we've been doing historically. You can see since 2012, basically, we've just been a constant little ramp going up. Now, it has gone up more than we would like. And it's kind of hard to tell, but right from this point here to about this point here, it started going up more than we wanted to. That was the effect of COVID. That pretty much happened, I think, pretty well all over the country. Sale prices went through the roof. A bunch of people were stuck at home. They wanted a new house. Interest rates were extremely low. And so it's because of those super, super low interest rates that the home prices went wild, okay? The home sold, inventory went down because everyone was buying a house, and because everyone was buying a house, the prices spiked. So we kind of should see this. I mean, this trend line is pretty normal. However, starting in here, this is when things went a little bonkers. So what have we done since then? Basically, since January 2023, you can see we are still going up, but it's just a pretty moderate pace. It's nothing super significant. It's nothing too notable, quite honestly. The historic average of homes in the U.S. go up somewhere between 3 to 4% every year. So that's just normal to what expect. If you wait a year from now, on average, historically, we're going to go up 3 to 4%. That same home is going to be 3 to 4% more expensive a year from now. Now, that obviously is going to go up and down. It's an average. It's not guaranteed every year, but pretty good numbers. So if we look, let me zoom in for the last 3 years. I'm going to do the 1 year, and I'm going to switch it. This is the month-to-month change. Okay, let's look at this. 3 years. The previous slide was the rolling 12-month average, which is probably good to have like a broader picture of it. I don't really like to look at a really granular chart. But in any case, what you're seeing here, this is seasonality. So obviously our sale prices drop during the winter months, and then they spike during those summer months, okay? It's never smooth. It's always kind of jagged up and down, but it's always down in the winter and it's always up in the summer. This was a little bit notable. I'll show you guys here. So I'm never going to sugarcoat things. I just give you the facts and you do what you want to do with them. From February to March this year, we did actually sit perfectly flat. So our Twin Cities median sale price was $380, and it was $380 again last month. I'm recording this in April, but obviously the numbers close out at the end of each month. So that was pretty interesting. I did look a ways back. I forget how far I went, but in something like the last 10 years, we haven't really ever seen that one happen too much. Now, it's not totally unusual, for like here, you can see April to May, we did drop here $10,000 is that. So that one dropped. It's never a nice, perfect little smooth curve, but that was pretty interesting. It doesn't surprise me, quite honestly. I don't think it's something that you should be majorly concerned with. Let me zoom back in for you. The reason being, interest rates are still high. They came down and then they yo-yoed back up, which was, I think, a little bit confusing or frustrating or maybe concerning for home buyers. And then also, if you look at what our market's doing politically, there's just been a lot of unknowns. Okay, I don't care if you're hardcore Republican or hardcore Democratic, wherever you are, I'm 100% apolitical. I don't care about any of it. But I will say, just the uncertainty of, is what Trump's doing with the economy, with changes, with presidential orders, with tariffs, is, immigration, are all these things going to be wonderful or horrible? Everybody's divided and thinks it's one extreme or the other. And I think because of the uncertainty, people are just pushing pause. And so because of the pause with that yo-yo of interest rates, I think people are kind of just like pushing pause, and they're kind of cautiously optimistic. Like, let's just let the dust settle, see how this goes. And maybe they're like, how about we just renew our rent for one more year and then we'll see what happens and we'll do something next year. That's a fair point. Like, I'm not going to try and twist anybody's arm. If you want to push pause, by all means. But I think that's what we're seeing reflected here. I don't think it's so much that there's a bad thing happening as much as it's just people are unsure. They're like, let's just see how this goes. And then with interest rates too, let me pull this back into the last 1 year. We had kind of started the year fairly optimistically, right? Well, okay, let me back up. We started the year not doing so great. Okay, this is the beginning of January. We spiked back up and hit 7.25. Nobody liked that. But then as the weather warmed up and as people got more interested in buying a home, nobody's really buying a home in December, January, obviously. So that as February rolls around, interest rates start to drop down, and I think people are feeling pretty good. People are feeling kind of optimistic. And then right around here is going to be when a lot of things started ramping up, uncertainty in the market, everything else. And in the matter of, I think this is going to be about a week, we went from 6.6 to 7.07. Okay, so we went up almost 0.5% in the span of a week. So then all of a sudden, I think a bunch of people was like, what in the world just happened? I thought we were going in the right direction. Things were coming down. Interest rates are supposed to be getting better. Everyone's talking about how rates are going to be sliding down over the course of 2025, and then they didn't. And so I think that also is just causing more people to like push pause, even if they're not like stopping their home search. They're just holding out for a week or 2 or 3 or a month. And so I think that is going to be a lot of the things that happened. Now, in fairness, that did happen in April versus I'm reporting through March's numbers, but I think there's just been there were some symptomatic things going on here with the unknowns in the market that then had kind of a latent effect showing up with the interest rates. But you put everything together, and I think that's the biggest point that we're seeing here. So sale prices are not coming down in the Twin Cities currently. However, they did sit flat, which was pretty interesting. So let's just say worst case scenario, like what's going to happen if everything just hits the fan? Sale prices go up, price of goods goes up, they can't build building materials, houses, new construction, blah, blah, blah. All the things go up. In reality, let's zoom back out to here, okay? Because I want to give you guys perspective. I'm going to zoom you out. In reality, we could stand to come down on sale prices, and I would not lose a minute of sleep if sale prices came down, okay? So when you hear if and when that should happen, who knows? Maybe next month our sale price number will come down. That's extremely likely. Never mind. I take it back. I don't think that's going to happen. But if it did, let's just say worst case scenario, we're going to be just fine. Like buyers would be cheering and would be more likely to get out into the market. Even though rates went up, they're like, oh, shoot, I can actually afford a home now. Bingo. And then it'll jump into the market, I think. So don't read that as a bad thing. I guarantee you there will be, I shouldn't even say this. A colleague of mine, which she always says, I guarantee it. That's what I'm saying. I guarantee you when either prices or interest rates come down, buyers will be dumping into the market because a lot of them have held off. The quantity of home selling is back. We can see all those numbers. So they're going to jump into the market at that point. So with that, I'm going to push pause on this video for this month. If you are new to the channel, hey, welcome. I'm Joe Carmack. I talk all about living in the Twin Cities real estate market and a million other great things like where to live and fun things to do. So make sure you go find all my information in the description down below. I'm happy to answer your questions and help however I can. Thank you so much. My name